Welcome to the Decent People Podcast, a production of Decentral Media, where we're committed to telling the stories of the founders, builders, and visionaries who are creating a new decentralized economy and internet experience. You guys know it as Web3 or blockchain, and we're going to bring you the smartest and most interesting people in the space for intimate conversations that reveal their background, how they got into crypto in the first place, and what they're doing today to make a decentralized future a reality. Thanks so much for joining us. Make sure to check out our site at decentral.io. Now to the show. Hi, and welcome to the latest episode of Decent People. I'm your host, Matt Leising, and today we've got Adam Jackson of Braintrust on the show. If you're a fan of Decent People, and there might be 5 of you out there, you are probably saying, wait, what's going on? Adam was just on like a few episodes ago, and that is true. What it comes down to is that I'm an idiot, and I didn't know what I was doing in the early days. And so when we were recording our interview, Zoom, I had not upgraded my Zoom account, and I only had that 40-minute limit. So as the interview was going along, all of a sudden I'm seeing you've got 5 more minutes of interview time, and then we're going to cut you off. So that is not what you want when you're trying to have a natural conversation. So we had to kind of cut it short before that we got into some of the interesting stuff that Adam and Braintrust are doing. So again, I'm an idiot. Adam was great on that episode, but we are going to kind of pick up where we left off. And so how you doing, Adam?
Doing well. And first, thanks for having me back. And second, sorry for not being succinct enough to get to the interesting part within the first 40 minutes. So apologies to you and the audience.
Well, it's funny when I'm doing these and I like to talk about people's lives and like their childhood and their parents, it goes a bit long. And so I think that's what, I was fascinated by your upbringing and everything. But I do have to ask you, on your end, did you see that the recording was going to end in a certain amount of time, or is that just on my end?
No, I did see it. And it was giving me a bit of angst, but also like pressuring me to like, hey, try to be more interesting here, because we have, constraints are good sometimes, but glad to be back either way. And totally. By the way, really enjoyed your other episodes. I love this longer format. I think it, I think it just does a great job of giving all the context.
Oh, thank you. I really appreciate that. All right. So if you didn't catch our first episode with Adam, I'm just going to try to do a quick recap, and then Adam, jump in if I missed anything important. But okay, you're a kid. You don't like authority. Not a good student, came from a humble beginning and really wanted to make some money. Came out of college with about $250,000 in student debt, which still kind of blows my mind. So you were looking for something. Came to California, tried LA, it didn't work. Went to San Francisco, where the .com crash had just happened and kind of cleared out the city. It was a nice time to be there, all things considered. And you kind of got in on the ground floor of Web 1, where you realized you could build websites for neighborhood businesses and get them to start advertising on the web to bring in foot traffic. That was a very new thing at the time, and you did quite well at that. You went on to create Doctor on Demand, which was a partnership with Dr. Phil of Oprah fame. And then soon realized you weren't qualified to kind of run that business anymore when it got huge. So kind of exited that. And right around that time, about 2016, is when you discovered Ethereum. And you talked about, the ERC20 token, which is the Ethereum way of creating a brand new cryptocurrency back then. It kind of blew your mind. And that this now unlocked all these sort of ideas for you. And you talked about early on, you said you wanted to own the way you make a living. And I think you were talking about that in the context of Web3. So I'm going to pause here and just see if I forgot anything important, or are we kind of like set up now to start talking about Braintrust and the tokenomics that you guys have behind the project?
No, that is a great setup.
Okay. All right. So as I mentioned in the previous episode, this model of having a token to incentivize the community and incentivize users and then have a way for the developers to get paid was kind of the first way that I understood Ethereum and what it meant and how it was different. And I had said that I was surprised that it didn't take off more. You guys are having success with it. And so why don't you just quickly, if you can, give an overview of the token, who earns it, what it's meant to do, and how it's meant to align incentives for the folks in your network on Braintrust.
Yeah, absolutely. So I'll talk about how you get the token, the Braintrust token, and then I'll talk about why you'd want it and what you use it for. So there's dozens of ways to get it, but the primary way, it's an incentive mechanism on the network. So you earn the token by referring new talent to the network, or being a community screener, so vetting that talent to get them on board, or inviting clients. By the way, 100% of new client activation right now, I just heard this stat yesterday in our all hands, 100% of new clients are coming from the referral program, what we call the connector program, or helping onboard those clients. You can also earn tokens by, writing code, writing copy, doing design work, just anything that like a normal Web2 company would have hired employees to do. We still do have employees, but mostly the community kind of develops this protocol and does so in exchange for usually some mixture of dollars and tokens. And then the primary use case for the token is to control the network. So it's our governance token, one vote. Token holders can propose changes to the network, like should we change the fees, or what feature should we buy next, or should something in the token economy change? And I can go through big examples of how that's happened already just in the last few months. And then there's other features, utility features we're experimenting with the token, like staking tokens along with your bids in order to stand out in a competitive bidding environment. Of course, the opposite is the case right now. We have a talent constrained network. And so we're a proposal just passed governance to implement what we call proposal staking. So companies that want proposals on their jobs will actually put an incentive, a token incentive along with, hey, if you submit a qualified proposal and we don't pick you, you'll still get some tokens, right? Kind of like.
Okay. You're saying you've got more jobs than workers right now on the platform?
That's right.
Okay. And this is a good point to say, you guys are concentrating on basically IT positions and software development, blockchain, right? In that area, knowledge workers.
There's 5 types of roles that primarily on Braintrust right now. It's software engineer, designer, product manager, project manager, and DevOps, kind of the heavy kind of back end stuff. So those are the 5 types of roles that are needed to build literally any kind of enterprise software around the world. And so it sounds narrow, but that's actually a really deep category. There's over $1 trillion a year of outsourcing just in that category.
Yeah. And then one last thing, I think it would be great to restate. You had a great way of putting it in the previous episode, the old way versus the new way, and like Upwork and Fiverr and the percents they take out, and then, or you can go to Deloitte and Accenture. Could you just kind of go over that again with the percentages and the rates per hour that you mentioned?
Yeah, absolutely. So, I mean, if you're a worker in one of those 5 types of roles, you can go work full time at Google or Facebook or whatever, but the majority of folks who do those roles will either go to a staffing firm like Deloitte, Accenture, PwC, or try to make a living on a marketplace like Fiverr, Upwork. And so the old way is, let's take the staffing firms, because that's like 90+% of the pie there. The marketplaces are actually relatively small. The old way is, you go get a job at Accenture. They give you a steady paycheck and healthcare in exchange for, they tell you where to go, what to do, and exactly, what you're going to be working on. You don't have any autonomy really over who you work for, what you work on, and where you do it. Old way. And by the way, they'll pay you, I use the figure that a person from the industry told me a while ago, $75 an hour while they're billing you out at $425 an hour. That's an actual spread we've seen in the marketplace. And so that's the old way. The new way basically inverts all those things, right? This is what we strive to accomplish with Braintrust. Is the new way is you come to Braintrust, you apply, you create your talent profile, the community screens and vets you and approves you, make sure you are who you say you are and you can do what you say you can do. And then you pick off client jobs, you set your own market rate, whatever you want to make, whatever you think is fair. Obviously it's a marketplace, so it has to be competitive. You're going to keep 100% of that rate. So if you say you want to make $200 an hour, you list that up. Whatever client takes you is going to pay you $200 an hour. There's a 10% fee that the network, the Braintrust network takes that takes away from the client, but you still get your 200. You can work as little or as much as you want, and it's fully remote. You can work from wherever you want. Every client on Braintrust realizes that it's all distributed now geographically. And so the new way, you get marked up only 10% instead of 3x. You can work as little or as much as you want. You can work from where you want. You can take 6 months off if you want to. And it's a total, and if you earn tokens, you have full control. You can vote your tokens. You actually have influence over the network where you make your living, unlike an employee at a consulting firm, which has no influence at all.
Yeah. All right. And so just to go back a little bit, you mentioned the 10% fee comes from the firms that are hiring, correct?
That's right. The firm that pays the talent, it also pays the 10% fee.
Okay, and that's how Braintrust earns its revenue. That's the model there.
Yeah, and this is actually a relatively new upgrade to the token economy of Braintrust. If I can drill into this 10% real quick. So when the network launched, the 10% was just paid in cash and would just go into the bank account of whichever node on Braintrust brought the client. And then the community, this is really interesting. The community proposed on our snapshot, hey, like, you know, the treasury is eventually going to run dry from paying referral rewards and paying out grants. Like, we should figure out a way to replenish treasury. And it was proposed, voted, and implemented that 10% fee that the network charges clients should be paid in Braintrust token instead of dollars. And so now you'll see those dollars flow from the client into a new smart contract called Fee Converter. That Fee Converter contract goes and buys Braintrust tokens on the open market and deposits those tokens to the Braintrust DAO, which is then used to further develop the protocol based on community vote. Okay.
So that's a lot to take in. Where are you on the risk you face that this model and Braintrust token could be deemed a security by the Securities and Exchange Commission, for example, and how much due diligence have you done on that, and where do you feel the thinking is on that at the moment?
Yeah, absolutely. I mean, this is a really important point that any project building in the United States needs to take seriously. We partnered with Fenwick and West, and here in the US, big law firm, really at the inception of the project, just to make sure we were completely compliant with the SEC and everybody else, CFTC and you name it. And you know, it's interesting, like a popular argument the crypto community has is that, you know, regulations in the US around this are ambiguous, and they're actually not. They're actually really clear. There's a Howie test that you need to fail one or more of the prongs of to not be a security. Braintrust, you know, very easily cleared those hurdles. People may not like the rules, but the rules are actually pretty clear, right? And I don't disagree that like the rules from 1930s should probably be updated for crypto, but to say it's ambiguous, I think is a bit disingenuous. So yeah, Braintrust, you know, got a legal opinion. It's not a security, and it's really like, you know, Braintrust is a governance token. It has real utility on the network. Its cash value has no bearing on the operational the functionality of the network. It doesn't matter what the price is. You know, it's a pure play down the fairway utility token. So it always was that way. It was never built to be like a dividend machine or staking rewards or profit returns. It doesn't do any of that stuff. And so, you know, we were, you know, happy to have that kind of clearly defined from the inception of the project. And I think other projects would be smart to sort of just get that stuff kind of cleaned up, before they launch.
Okay. Just to play devil's advocate for a second, if you are buying it on the open market and there is a market for it, does that worry you that, and people hold the token and that incentive, they could be seen as working toward, the economic gain of the entire venture, which would then theoretically make the cost or the price of Braintrust token go up, and that could sort of get the SEC's attention?
Yeah, I mean, the prices of things going up and down doesn't make something a security, right? It's, you could have a collectible, an NFT, a baseball card, a rare putter. All of those things value could go up, and that in and of itself doesn't make it a security. And so Braintrust is a squarely utility token. It's kind of your ticket to the network. It's your method of control. And so its price will go up and down, just like all cryptos do, and just like many other assets do that have finite supply. And so I don't think price action alone is going to get any sort of negative attention from a regulatory perspective.
Okay. And then I guess, without diving into the weeds in the Howie test, because it is a little complicated, but one of the prongs, and I believe there are 5, one of the prongs is that the venture is controlled by a small group of people who are working to profit from it or, increase its value. And I would imagine having your network of so many, I think you're around 40,000 people now on your network. That seems to me, that's not a small group of people. That's not a CEO and a small team working pre-IPO to, make a tech company, interesting to venture capital.
100% right. I think so. I think there's actually 4 prongs of the test, and I can't name them off the top of my head. So it's not and certainly not my wheelhouse of expertise. But what you're saying is true. Like it's if you have sort of one company, really just responsible for the development of something, you can say it's decentralized, but it's really not, right? And I think we've seen SEC action against that. I think that's part of the Ripple case, actually. Ripple was the main entity behind XRP. And so that's an important factor. With Braintrust, we were actually 6 companies from the start, from well before. So we started centralized and then followed this path of progressive decentralization. And so we started, as a company in 2018, and then we decentralized on mainnet in September of 2021. And we actually we started off as there were 6 teams, different companies, only one of which I own and control. The others are completely unaffiliated with me. And those 6 teams really kind of built up the network over time. And now, it's actually like 46,000 people actively contributing in the network. So, I think they call that decentralization theater when one startup just sort of, mints a token and says, look, we're decentralized.
Yeah. Yeah. And that's a great point you make, is that, and I've been saying this for a while now, I don't think you can't start a project in a decentralized fashion. There has to be some centralization there at the beginning. Otherwise, where does the idea come from, and where is the direction and leadership, so that you can bring other people in and then slowly decentralize it over time? I think a lot of people are learning that in the DAO space now, because they're just proliferating in all these different directions, kind of away from finance. I wonder, more broadly, the SEC and specifically Chairman Gary Gensler has come in for some pretty harsh criticism from the crypto community. Where do you stand on that? And are you, as you just said, there are rules there. They do date from the 1930s, and the Howie test was based on someone selling shares in an orange orchard in Florida. So not exactly Web3 kind of stuff.
-3.
Yeah. Where are you on that? Like, what would you like to see from the SEC? Are you happy? Are you unhappy? And where do you think Congress should get involved?
Yeah, well, look, I have thought deeply about this topic. Although I'm not a lawyer or a regulatory expert, I am an American who is had a hand in issuing a token. So I feel like I have, some position here at least. So let me start with like, let's approach this from first principles, right? The American securities markets, the two big stock exchanges, are the most vibrant and robust mankind has ever seen. And the reason for that, and there's many reasons, but one of the backbones of that is because there are rules, and the rules are enforced, right? The rules they keep the level playing field. They make it very hard to be fraudulent, right? As a public company. And like we've iterated this, right? Like, from the 30s all the way on, Enron changed things, Dodd-Frank changed things. And like, yeah, okay. Like those things made it harder to go public, maybe made it more expensive, et cetera. But what do we get in exchange for that? The most trusted, robust markets, financial markets on the planet by 10 miles, right? Like no one even comes close. And we all benefit from that, right? Everyone, well, not all of us, everyone who has a retirement account, right? No, we won't get into the kind of the wealth inequality thing, which is another major issue. But, so the SEC has a large role in protecting investors from fraud, from rule breakers, and, enter cryptocurrency. And unfortunately, you had sort of both, right? You had projects building what are ostensibly securities, but claiming because it's on a blockchain, it's not a security. That's not great. And two, outright fraudsters, like we saw this week, the BitConnect folks were finally cornered, and et cetera. So look, I think there's no argument about them going after fraud in the space. That's amazing. It's great for the space. Where the contention comes in is like, how should they regulate crypto? Yes or no? And if so, how? I personally think they should. And like I said, today, like the rules are actually pretty clear. The argument then becomes, well, maybe they're a bit arduous, right? And so I agree that, the 1930s rules can and should be updated. I actually think some of the remarks Commissioner Hester Peirce made last year, she basically advocated for something like a safe harbor where a project could, have a grace period of 2 years or something where, maybe they are acting like a security, but if they can sufficiently decentralize within those 2 years, then it's okay. And then let's define what sufficient decentralization means. I don't think anyone really knows what that means yet. We take the ultra conservative viewpoint at Braintrust of, if me, my co-founder, the core teams, if we all disappeared, like just unplugged and went offline tomorrow, would Braintrust still operate and be permissionless and continue to function? And the answer to that question is yes. But I don't know if that's an appropriate test or not for going forward. So, there are many in the space who are basically like, hey, just get out, right? Like there should be no regulation at all. And I think if that were ever the case, the space will never have the chance to be as big and thriving and as robust as, something like we see with the traditional finance system.
Yeah, I agree. I don't think telling regulators to just buzz off is the answer. No. I do think that there are certain properties in this industry, like a smart contract who's managing deposits and paying interest on that, or a smart contract that's at the middle of a decentralized exchange. Where, these are two major things that the SEC regulates in the real world. But if it's a bunch of code, how do they deal with that? Who's liable for that code if there was something malicious? Or so that's where I come down on, where this has outpaced the current traditional financial system in enough of a way, in my opinion, that these sort of things need to be addressed. Because I don't think, and way more about this than I do, as a software developer or somebody writing that code, what am I liable for? I think that needs to be addressed, so that people can do these things, with the knowledge of what the risks are.
Yeah, absolutely right. I think that recent rule, I think that got rolled into the infrastructure bill that was going to make anyone who touches these things have to register as a broker. So that would include developers, right?
Yeah.
I think that got pulled out, but that's arduous, right? I think that's going too far on the regulatory side. Maybe it's an interesting bright line to draw around smart contracts, right? It's like, hey, once something is on Ethereum, we all agree, and the SEC, I think, has even acknowledged, like, you can't turn Ethereum off, right? It cannot be disabled. It is quite sufficiently decentralized. Nobody owns it. And so if something is on Ethereum and operating, maybe it's caveat emptor at that point, right? I think, holding developed now, look, that doesn't mean if there's fraud, you can't, like, if the developer puts a backdoor in it and is stealing through it, then he's committing a crime, right? Or if you make money on a trade and don't pay income tax, that's tax evasion, right? I think those are like well-worn things, but should the SEC have purview over Uniswap, right? That's a tough one, right? I don't know. How would that even work?
Yeah, that's the question I have. And another thing, just to fill out your point, the other half of, or the other part of the securities market is, debt and bonds and treasury notes. And that's an enormous part of global finance, and something that the SEC has, purview over, like the US Treasury market, which is always said to be the most liquid and, deepest market in the world. It's got a ton of different problems in its market structure, which is like a whole nother episode. So we won't get into that. But I saw the securities question is fascinating. And I really hope that there's some work done soon to give a little bit more clarity on where things stand, because I don't think that regulating this market through enforcement actions is the way to go here. And that's, unfortunately, I think what the SEC has done, not just in this market, but in others as well. So another thing I wanted to just get back to, you said in the last time we spoke that, your greatest hope is that other kind of industries or services take on this token model and apply it to their own, like, let's say it's like Uber for the car, or, Seamless for food. You've got these middlemen sitting in the middle here taking, around 30% or so of the fees for providing that service. What you've done is cut out the middleman entirely, and the profits stay with the people who are, part of the network. Are you seeing any movement there, or any hopeful signs that other projects are taking on this token model?
Well, unfortunately, no, not yet. I haven't, and like, let me caveat by saying, like, I'm not a full-time investor. I don't run a fund anymore. I angel invest out of my family office, but I'm not out there actively seeking deals. So there could be somebody doing this. I'm just not aware of them. I will say that folks at Braintrust get approached pretty regularly, myself and actually more often other people, about expanding into categories like legal or accounting or compliance professionals, essentially just other categories of knowledge workers. I've had lawyers tell me, like, it doesn't make sense for law firms to like have a huge staff of paralegals on salary, right? Like, there should be a Braintrust of paralegals. And I actually think that probably will be one of the next categories you'll see on Braintrust, are other knowledge worker categories. As I've said, and you just mentioned, I mean, my greatest thrill would be to see, every time someone pulls up to your house to pick you up or drop off food or groceries, that person is an owner of the network that is dispatching them, and is not paying a giant fee to some profit-seeking corporation in the middle, but instead that network is just being run by software. It's essentially self-sufficient, and this, because if you think about it, like, there's no efficiency across categories in the gig economy right now, right? Like, you could be an Uber driver with the Uber and Lyft app open at the same time, fine. But you probably don't have the Uber, DoorDash, Instacart, Lyft Amazon, FedEx, right? There's like 20 companies that are dispatching drivers for last mile. And part of the intellectual property or the moat, the economic moat that those companies have are the knowledge and captivity of their driver network, right? And that network is valuable to them and they don't want to share it, lease it out. And they certainly don't want to have market rates paid, right? So imagine if an app were to aggregate everyone who's a last mile worker into one big supply, a tokenized network, like the Braintrust Talent Network. And the companies would then have to come in and compete for those last miles and hours, right? Just like Goldman Sachs and Nike and JP Morgan have to compete for Braintrust talent in hours, right? Which effectively makes a fair market for the talent on the Braintrust network. Why shouldn't that same thing happen with last mile workers, right? It would be an incredible innovation economically. It would be dramatically increase the wages and fairness for the drivers, right? The supply side. It would make coming in and out of those pools far easier because there's 10 times more demand, and you'd cut out the middleman, right? So the demand pays less and the supply gets more. I mean, to me, it'd be magical.
Right. And I think we saw that with what Uber did to the taxi industry. But I think what's interesting here is that's because Uber drivers came along with their cars. That's what they needed. That was the capital, so quote unquote, that they needed. If you're talking about FedEx or other things where it's like the package is in control of the company, then I think they have a lot more sway over, whether they would like agree to market rates for that last mile. Because, they've got that leverage, I think, in that, which was interesting. But
real quick, Matt, let's go back to the Uber example, right? So yeah, Uber, crushed the medallion cartel, right? Mm-hmm. Okay, great. That was great, right? And then they start out with fleets of black cars, and it was an expensive service, and like the value stack was still kind of fair. But then they started making people come in with their own cars, and then they started keeping the surge pricing, and then they started playing these games where the drivers have to compete with each other, and all they did, the real innovation there was driving down the effective hourly wage of the driver. And this isn't just Uber, it's DoorDash and Instacart, same thing. And so, Georgetown University did a study on this. They looked at, it was in 2020, what's the effective minimum or the effective hourly wage of a gig worker? It was something like $5.75 or something, right? So yeah, Uber's great innovation. Yeah, they crushed a inherently corrupt cartel and then became one themselves.
Yeah, that's the rake that you mentioned in our last conversation. One thing you said earlier really interested me, and that was how there was a community proposal to change the way that the 10% fee was paid from just cash now into Braintrust tokens. What has that been like from you to have that community and to sort of have this crowd-sourced knowledge base and group of people, like over 40,000 people who potentially could help you make changes for the better? I mean, that must be, just tell me about that.
Well, it's a double-edged sword. I want to be really honest and sort of, genuine about this. It's certainly like, on one hand, being a centralized company CEO, like you have more control, you sort of like, you say it happens, right? It's like, those are nice things. I appreciate those things sometimes. When you're decentralized, you still can like control your own node, right? You can still kind of make your own contribution, but you can't create sweeping changes without consensus. And so that could make things a little slower. But on the flip side, the other side of that coin is what you just mentioned, like you're essentially crowdsourcing innovation, which to me, the real value there is the diversity of new ideas, right? Like I call it like intellectual biodiversity. Like folks around the world are now thinking about this that you would have never found and hired on your own. They come in because they think, first of all, they're probably making a living on Braintrust, so they have a vested interest, and they're thinking of things that we probably never would have thought of, and they can implement them on their own. That fee change I just mentioned, was proposed by someone we don't know. It was voted on. It was implemented by folks that don't work for me, at least. And now it's live, right? And it's like, it's amazing how quickly that happened, and just how the community, now sometimes, like, if you go to Discord, right, there's hot debates. I don't think everything that gets proposed is a great idea. And, sometimes I abstain, sometimes I don't, I don't know. But look, I would say it's net positive over centralized. And the other cool thing is, like, well, if like something goes wrong, like, it's not all my fault, right? Like, it's finally, right. It's
CYA. Yeah.
Totally.
Decentralized. I think that's fascinating. And like you were mentioning, the lines of communication are so different in this setup, where you can have this idea, get to the right people to propose it, and then have a vote on it. Whereas if this was a sort of top-down corporation, those ideas might just be languishing somewhere, in some far off office, and nobody like that person has a great idea, but they don't know how to get it to the right person, or they don't feel like they have the power to do that in the first place. And I think besides the tokenomics stuff that we've talked about, the social change that this sort of structure brings about is just as powerful.
100%. Like, I love that when you said, like, a good idea might go to someone's cubicle to die. Like, so what we do, like, if I have a good idea that I just know, like, my core team, we're a small team, we're constrained, right? We can only do so many things. I'll just throw it to the grants committee, which I'm not a member of. And the grants committee will say, I'll say, hey, like, what do you think about making a grant out of Treasury for someone to come along and just do this? And they'll weigh it. And if they think it's a good idea, they'll create a grant for it. And then literally someone out of thin air can just appear, and they do, and say, like, hey, here's a proposal. Like, I know how to do that. I'll submit a proposal. And so that program just kicked off. It's too early to sort of sing its praises, but I think it's an amazing way to decentralize forward progress on a protocol.
Yeah. Well, Adam, this has been great. I'm really glad that we got a chance to connect again and just kind of dive into the tokenomics and all the different cool new things that your model is allowing. So congrats. It's really nice to talk to somebody who's actually doing this and actually helping people, and rather than the theoretical side of it, which is still so much a part of what Web3 is about. So congrats.
Awesome, Matt. Well, thank you so much for having me back. I love the sort of in-depth, being able to go down these rabbit holes with you, and really, again, enjoy your format, and enjoying your other episodes. So thanks for having me.
Yeah, you're welcome, Adam. And I'm sure we'll talk again soon.
Sounds good. Take care, man.